Happy Wednesday. I was going to say Monday, but feels like a Monday because it's the beginning of the conference. As she mentioned, I'm Jacquelyn Melinek. I'm going to be moderating this panel, and I have with us Fabio Frontini, the founder of Abraxas Capital Management, and then we have Jeremy de Groodt, co-founder and CTO of Keyrock, and Laura Vidiella, the VP of Business Development and Strategy at LedgerPrime. Thanks, guys, for being here today.
Thank you.
Thank you. Hello.
Thank you.
Yeah, good morning, good afternoon. To set the tone, start with this. How bullish or bearish is the current day market sentiment? How are you guys feeling?
May I pass?
No.
Okay. Let's put it this way. It's very volatile, even if the implied vol from the option is quite low, actually, compared to standards. But I think it's very volatile. Everybody got taken by surprise by the rally from when it was down to 16,000, and everybody was thinking, okay, now it's going to 10, whatever. I think the key event that changed the market structure was the US authorities usual actually stopping the BUSD issuance, and from there the market started to go up. I don't want to make any assumption, but maybe something was linked to what happened at the time. So then the market started to go up and the sentiment got bullish. Right now, I think on average, people are quite bullish in terms of thinking that the market could correct, but it will go up more.
Yeah, I mean, I think after the regulatory crackdown, though, people were a bit more bearish, especially with the stand on the US that they're taking. But indeed, like right now, I think people are mostly focusing on, building, trying to create actually value, which I mean, it's happening every time we go back down to bear market. Like people focus again on, okay, like what is actually what we're trying to create here, and sort of less on the speculative aspect or short-term gains. And I think I would say that's mostly the sentiment I can see now.
Good question. I think it depends on who you ask as well, right? Let's say for someone that is looking for capital right now, a lot of people will tell you it's impossible to find anything because everything is very thin. On the option side, for instance, within the market, options have been doing pretty well over the past couple months, especially Bitcoin, Ethereum, very liquid there. And most people will tell you that we hit the bottom already, right? And then with anything from a regulatory perspective, as well as what's happening in the US with the banks and also in Switzerland, the more we see of this, the better for us. But TBD, summer is coming. Historically, summers have been pretty flat. So I think it's a bit of a turning point, but we might see a bit of flatness for a little bit.
I checked this before we got on stage, but Bitcoin's at like 26,000, I think, and it's up from what, 13, 14 earlier this year. We had 30 at one point. I mean, like things are moving around. It could be seen as positive, perhaps. But what do you think is the leading drivers of the present day market? Like what is moving prices right now? Or what are you looking at?
Banks, that's one of them, right? From there, we can also say regulation. The EU approved MiCA a couple of weeks ago, or at least it's like heading somehow towards the right direction, even though it's still like pretty rough, but that sets the stage for what the rest of the world could look into. And I think overall, we have done a bit of a cleanup over the past 6 months, from projects to funds to any sort of other entity that was more thin air. And we have a lot more solid things coming in.
Silence, okay.
Lack of sellers.
And how far apart do you think is the crypto sentiment right now between like the people in this room? They understand what Avalanche is, what blockchains are. They're probably deep in the crypto world to the average day person. Do you think there is any sense of cohesion with normal people, quote unquote, and crypto people? Or are we far apart? Is this the farthest apart we've been? Or do you think mainstream audiences are going to get into this?
Me. Okay.
Sure.
I think we are a bit quite far at the moment, honestly. I think from our experience, since the FTX debacle last year, a lot of people don't want to, normal people, I mean, it's like they don't want to talk about crypto. They see the performance of the crypto market so far, but they still believe it, it does not really matter. Also on the other side, we didn't mention before, with rates at 4 3/4, probably going to 5 today, I think, most likely. On an overnight repo in the US, it's a bit difficult to get a normal guy actually to look at crypto. So I think we are still we are quite far. From my experience, I've been in the market 5 years only, so I think this is the most distance I've seen so far.
Yeah, I agree. I think now there's still a lot of like education that needs to be done in terms of, okay, what's the reason of crypto? What makes a lot of noise every time on the headlines is the new NFT, the new Ponzi scheme, and that actually might take a lot of space compared to other projects that are creating a lot of value there. I mean, we have like amazing chains that are coming out. We have protocols that become more and more sophisticated, safer, and they're complex. And so the average person, I think, is also harder to understand, okay, what's the value added of those type of products and why are they being created? And that's probably, it's easier to just say, yeah, crypto, it's a scam for the average person, instead of trying to understand a bit, okay, but what's really under?
I'm going to disagree a little bit here. Yes, I'm a bit of too much of an optimistic sometimes, I guess, but part of it I agree with you guys. I think something we should clear more is crypto Twitter, because anyone sometimes that goes into crypto Twitter and sees what's happening, the first thing you get from any friend is like, this is not serious. There's all these like meme coins, all these pumps and dumps, I'm gonna lose my money, or I don't really know what's going on. So that side, yes, but more globally, financial institutions that were pretty much already trading, we know a lot of them that have stopped for the year until there's more regulatory, a better vision there, right? But they're still looking to it, and they haven't like completely left. And there's still even new ones that are starting to like strategize and hire people to see how we can do this for the next bull cycle, because they know there's something coming. And there's also, especially this summit this year, there's a lot of enterprises coming here that they want to learn more. I even think more than last year, as far as for what I've heard. So I think it's more that it's distant from the point of view that they might not be actively building, but they are looking more into it, and they are working together with a lot of whatever partner they're finding to lead towards what 2024 is going to look like.
I just agree to disagree, but the question was about normal people, actually. Like institution, I agree. We can see it as well. Probably you can see it as well. But there is definitely an interest.
Right.
Also because, yeah, obviously the market is up 90% from the beginning of the year, or 70% or whatever you look, and they've lost so much money in the last few years that they feel like they have to do something. So institutional, I agree entirely. I agree. I disagree on normal people. Normal people, forget. At the moment, personally, forget it.
I don't know about that, but we can move on.
We could talk after. In terms of meme coins, I'm sure as you all have seen on crypto Twitter and just in general, we've got a new one called Pepe that is actually kind of doing pretty well. And I remember last year, or maybe it feels longer than that, the Shiba Inu one. And I had friends that knew nothing about crypto, but they're like, hey, I just bought crypto for the first time. And I was like, oh, okay, what'd you buy? And it was Shiba, which is not my first choice, personally. But now we have Pepe, and we have like all these meme tokens. So my question for you guys is, are these good for the crypto industry, or are they a joke? What are your thoughts on these meme coins bringing people in? It's not financial advice. None of this is financial advice.
But it's interesting because I think it polarizes a lot the type of people that are trading out there. I think we really have two categories of people, like some of them that try to have more sort of investor profile, and they really try to research the project they're trying to invest on and try to see maybe some fundamentals or really a reason. And then I say there's more like short-term traders or even almost gamblers, right? And in that case, it's more like, okay, I'm gonna gamble those meme coins, and that can be subsidized by maybe money they made early on, or like it's more money that usually they don't care on losing. So I would say it's tough because indeed it puts shadow on the other side of the people that are looking to maybe more look in the fundamentals. So, but on the other hand, I don't know if there's no bad advertisement. I don't know if that stands in crypto.
Brings them in, it brings them in, right?
I pass the question, actually. I don't make any comments on maybe. I really like because he makes money out of it. I don't touch.
We don't trade meme coins.
Who does that? Okay, shifting a little bit to market dynamics, I want to ask you guys, how strong is the consumer demand right now for crypto trading services? What are you seeing out there?
So can you repeat, actually?
How strong is consumer demand for crypto trading services right now?
Well, we do need more exchanges, right? We lost the big one back in November. Liquidity has kind of spread out through other exchanges, but are those the right ones? We'll see. The market will decide. There's great companies building new infrastructure, and I'm looking forward to seeing that. But yeah, that's the big question. We'll love to see what you guys have to say about it.
I will go back to my original answer on the fact that the real world is not really that close to the crowd here. And well, obviously there is a need for something, reliable, and regulated or whatever, just where people feel safe to put the money in. That's out of the question. Do we have a need right now, that people just really want to put money in? I don't think it's their time yet. That's my.
Yeah, indeed. I think for crypto right now, it's maybe stagnant in terms of adoption, but we still see some flows with NFTs, maybe also other industries that are coming in, like audio, music, gaming. I guess that's going to be also the next big driver to bring again like more, we'll say, mainstream consumers into Web3. But just purely crypto, I think indeed it's going to go like Fabio is going to go more into the institutional side and getting more and more professional.
What do you think could drive a further increase in institutional involvement? You just brought up institutions, so that brought me to my next question. If you want to start.
Yeah, I can start. So what drives, I guess there's a very big interest about more structured products, especially options. I think everyone has been hearing about how much options in crypto are booming. There is a CVI, crypto volatility indexes coming on. So all this type of product, I guess they are getting more and more attractive for investors to come on and step in. It's something they can relate also more for the traditional industry, allows them to have more elaborate strategies to sort of maybe hedge or the investment that they may do. I was hearing like big funds that, for example, invest in crypto companies, but then will start using options to kind of hedge part of the risk of the investment that they're trying to do. So it starts to add a sort of interesting mix into the ecosystem. But I do believe that the big value that still needs to be unlocked is actually the technology that is behind blockchain and all the nice, interesting protocols that we're building on it. It's still the lack of externalities and connecting to real-life products like bonds and the tokenization and all those things that are coming up. And that's where, for me, the main adoption will arrive, either from institutional or retail. But whenever we're going to use that technology to actually improve the current financial market instead of doing just another parallel financial system that is totally segregated.
I feel it's also a little bit about an egg and a chicken game here, because absolutely everything you said I agree with, but then at the same time we need fresh capital coming into crypto, right? For now, even if the largest, let's say like the largest players in derivatives exchanges or in options exchanges, it's pretty much the same users, just maybe like dealer to dealer, whatever you want to call it, but we need to get more accounts onboarded, more fresh capital coming in. But for that, we also need to see these products, because a lot of them will come in once they see those products, right? So it's kind of like, how do we solve this vicious cycle that, to be honest, we've been going around in circles for the past 2 years, right? Slowly there's more coming in, but yeah, we need this particular products to make this adoption happen.
I know, I agree. On top of that, I just go back to what she said before about the European moving along with the MiCA regulation. I think is very, very important. Unfortunately, the US is doing a total disaster right now, so we're going through the courts all the time, so hopefully this stuff is going to end hopefully soon, I don't know, but yeah, I think I agree entirely with what they said. We need product because institution like, let's put it this way, you have to think, the client of an institution, if you propose something that a client is able to do himself, he will do it. So, they look always for something like, with maybe capital protected notes, this kind of stuff, and options, so the whole option market needs to develop more. On that, I really entirely agree with what they said. But really, regulation right now, I think the European is moving in the right direction. MiCA is very important. US is what it is right now, unfortunately.
We had a fun hearing a couple weeks ago, that for sure.
How do you think like the regulatory sentiment globally affects institutional involvement? Obviously, we know in the US it's a hot topic right now, and then we have MICA, and then we have other things going on in Singapore, Hong Kong, other countries. What do you think is going to drive institutional involvement when it comes to regulation?
Well, definitely clarity. The point is that even in regulation-wise, we were discussing before about market segmentation. We don't have a uniform actually approach to things. Everybody is doing his own stuff. You know, one goes totally against, that is implicitly what the US is doing. And the problem with the US is that the banking, is a dollar-based, crypto is dollar-based. And to use dollar, you have to go through the US banking system. And that's the massive issue right now, because even institutions like us, who've been around for over 20 years, actually, even in traditional markets, it's difficult for us to open a bank account, to move the money in and out. So if you go back, okay, adoption, people getting in, there is the need of fiat on ramp, actually. That is not that easy. Even big exchanges, whatever, they have difficulties actually getting the money in through the banks because they are scared about the banks closing them their accounts. So the US remains, honestly, the gateway of this one. Yeah, European, Hong Kong, all the other stuff, all very good, but the big money is in the US. At the end of the day, it's like that. So until they stop this war on crypto there, until they stop and they let the bank start to do their job, probably, we are in a big macro environment with higher interest rate, losses not generated by the crypto ecosystem, by something else, by the usual grid. That's a big break on the development, from my point of view.
I totally agree. And just to come back on previously, to actually onboard more, other type of securities or like other type of assets that are coming more for traditional finance, until there's no clear regulatory framework on how this can be traded, sort of decentralized with no custodian, and the way we're completely changing the whole value chain of how this is managed, this won't be possible. So regulation is sort of needed also to have the crypto adoption, so that we come back to the chicken and the egg where, regulatory also needs to do its part.
Yeah, I think just one last point here to go with regulation is KYC, right? And better KYC systems, better credit tech systems. It is one of these things that the crypto community, some are very for, others are very against it, but if we really want institutional adoption, that's really the only way for many reasons, right? But one of the main one is trust. Trust was also broken recently. Now we're building that trust, and regulation combined with KYC is how we will get there.
And then looking at the macroeconomic environment, has a rising interest rate made crypto more or less attractive? Go ahead.
Go for it.
Well, maybe this is like economy 101. It's definitely less attractive because when you can make 5%, as I said before, on a repo market with with Cantor Fitzgerald, whatever they're called now, actually, with Bank of New York Mellon, basically zero risk from the point of view, and then on a DeFi protocol, actually, you make the same rates. It's like you make the math. Nobody will do it. And this is why, the TVL is down. It's not really picking up, et cetera, et cetera. It's not only the question of, inflation, token inflation that generates incentive, this kind of stuff. It's really the macroeconomic environment is a massive drag right now, because when you have a risk-free at 5%, it's tough to beat.
Yeah, but on the other hand, a lot of people still are struggling to get proper banking set up, right? So this is also something tough. Not everyone can, especially professionally, or actually invest into those type of assets. And I know a lot of people that even struggle to get banking just because they work in crypto. And imagine they want to even invest part of their assets, and taking the risk from one day to another one, everything gets frozen. That, I guess, it's also something that keeps, I think, the attractiveness of crypto. It's still your financial freedom. And until we don't have tokenized US bonds, it's gonna be, I think it's gonna remain attractive.
Nothing further. That was perfect.
Case closed. Looking at retail investors, what do you think of the sentiment there compared to previous years? All of you have been in the space for a little while now. What is the vibe? What are you feeling there?
We don't have retail investors, so I have no idea, honestly, to be honest. Unfortunately, because the way my company is set up and the fund we manage is target to institutional investors and ultra net worth individual professional. We don't really see retail investors, but feeling-wise, we go back to your other question. I think right now they're probably watching. They're probably watching, I would say. I don't know. I think they're on the sidelines, and they will come in. I'm sure they will come in, because as soon as interest rate top or they start to go down, we have this banking crisis in the US, keep developing, they get scared, money will flow in. You know, he was born in 2008, 2009 for this. And we see, you know, it is still here after so many years to prove that there is a way out of the banking system. So let's see.
Yeah, if you just look at the volumes and the amount of transaction, you see there's just a significant drop, and that just tells you that most of the people are hodling right now. They're just waiting for the next breakout. So I would say, yeah, the sentiment is quite low.
I think it was earlier this week, if not last week, I think Bitcoin saw like the most transactions in a long time though. So what would be driving that? Like who is this? Who's out there transacting?
I mean, it's an interesting view on it. Yeah, I mean, there is the whole Binance thing where Binance actually transferred a lot of their BUSD back to Bitcoin, and that's almost worth $1 billion that they transferred. But more in detail of where they were, I mean, there's a lot of meme coins going out, also pushing transaction, also even running on Bitcoin. So that's driving a sort of fake, I would say, sort of transaction volume.
Yeah, exactly. Only other small thing I can think about is also checking more on the derivative side, what's happening there for retail customers. I'm thinking of an example like LedgerX, CFTC regulated platform in the US. Retail volumes there have been pretty stagnant, right? And also comes up the question of, is this because of lack of education? Is it because lack of sophistication between retail traders? If we look more purpose exchanges, that's where we should be looking at a bit more of like the volumes and what's happening there to understand what they're doing. But it feels like it's definitely been stagnant a little bit. Maybe more movement around event-driven trading, but not towards the momentum we'd like to see.
Kind of going off of that, like stagnation, is there a reputational hazard or risk to this industry right now, given everything that's happened in the past year, from Terra Luna, which was about a year ago, to FTX, to everything going on with the banks?
Actually, crypto, sorry.
No, go ahead.
Yeah, for me, crypto didn't fail, actually. I mean, what failed is centralized institutions. I mean, when you look at FTX, we had the same thing with banks also just failing after. And actually, it's everything we're trying to actually solve here is trying to actually remove these centralized counterparties, trying to decentralize it, make it more transparent, make it more efficient. So I would say actually it's exactly what we're trying to get out of it. It's purely examples that we should learn from and say, okay, this is know why we're building all this sort of financial freedom.
We're also starting to remove custody from platforms, right? Most OTC desks right now, you'll see that they're doing that, right? Like as a basic offering to custody with a custodian or another platform. Same thing with like most exchanges. I think it's no secret that Binance and out there also looking into doing that, right? So, yeah.
Yeah, no, I agree. I mean, the system didn't fail at all, actually. So it's just, you know, it's bad actors, like in any industry. It's not only the crypto industry, everywhere. And, you know, and that's it. You know, the solution is, you know, regulate properly, centralized exchange, because going back to the retail adoption, these kind of things, et cetera, you know, let's not forget that the thing that needs to be really improved is the easiness of actually get into the, you know, in DeFi or whatever. But centralized exchange at the moment, they still look the best choice for retail at the beginning. And unfortunately, they're not really the best choice from a risk point of view, and we saw this. And so they need to be we go back again to the regulation to make sure that, you know, if they have assets in custody, they are properly regulated, they are segregating account, they should be, maybe, I don't know, maybe they should have a special banking chart, broker-dealer kind of stuff. And then, and the DeFi, and to be able to actually manage your own money directly, then we still need to improve the user experience, to be honest. I think it's still too difficult for the average guy to go in. As much as it looks very, very simple to you, if you get anyone that doesn't have a clue about crypto, you say open a wallet, do this, and the other one, the second line that you try to explain to him, he will say forget it, he will not do it.
I think for me it's important that at the end of the day, the financial freedom comes at the cost of knowledge. You can't have the best of both worlds and just expect that you just open that wallet, you store your like your seed phrase like on your notes, on your Google Drive, that gets hacked and you hold, I don't know, maybe the value of your apartment in there and everything gets wiped out from one day to another one. And that's, I think it's also part of the education. So, and I agree with you, the tools need to make it way more user-friendly. I mean, this still looks like the early days of internet where, I don't know, we almost need to send emails in command line, but we are not far from that still.
What do you think it'll take to get like regular people, quote unquote, and perhaps institutions to shift to more a decentralized world opposed to relying on centralized institutions?
You go.
I was gonna say, I think it has to be in a way where they don't realize, right? Like, it's this ideal that we all wanted, but when it comes down to the truth, they all end up using centralized platforms, right? Now, this is an example I use quite often, and maybe not the best one, but it makes me think of last year's Steppen, right? I think they onboarded millions of people, and it was kind of the decentralized version of, trying to think like this running app. I'm blanking my names now, but it's just like a running app that is decentralized. Most users did not even know how it worked, what it worked, and maybe it was not fully centralized. I'm not sure about the specifics, but you know what? It's this idea of going back to the UI and UX. It has to be that they're not even realizing they're doing it, and it's easy for them to make this transition, right? Otherwise, when you're adding a lot of steps, most people would just give up. Maybe because they're scared of making a mistake, it's too cumbersome, it's too many things to think of and look into. But sometimes I think we need to look into how other industries have built and they are where they are. I think that one of the issues we have is that we only focus within crypto, but we don't look outside to see successes and failures in other industries. And if we look into how they've done that product development and how they onboarded all those people, and we bring that into us, I think that will help us with more of a consumer retail adoption. By them not knowing that they're doing this bridge from centralized to decentralized, if they actually want that.
Yeah, I think too often people forget that crypto is a mean to an end. I mean, the goal is not just to trade cryptos on the centralized protocol. It's like, what's the usability? How are we going to onboard those users? Like, make it user-friendly, as you said.
We go back to the usual story again, so I don't want to repeat something that's already been said. Know your customer, know your transaction, all this kind of stuff that are a requirement for whatever the regulator actually wants to see, to be able to just put a rubber stamp and get people to trade. Well, to use crypto for what it's supposed to be. I mean, trading is a consequence of the fact that it was born to do something else, actually, like to transfer money and to keep money outside of a banking system and the system we know right now, to create a new system. It is, I think most of the people here are here to build new things actually on top of this one and to create the new money, as a matter of fact.
Let's wrap things up. My last question for you guys, and maybe you might not like this because I'm going to ask you to predict. What is your near-term and perhaps long-term, let's say long-term, beyond like 18 months, because that's a long time in crypto, for the crypto markets? Price.
He's better than me for this one, I guess.
Price predictions, but of what? Of Bitcoin, of the whole industry? I would say more market cap. Market cap, right? It will be more representative.
Okay,
Maybe market cap will be more
representative.
representative.
Easier. Okay, go ahead.
Go ahead.
Yeah. So how much then?
How much up?
What about Avalanche? We're at the Avalanche Summit.
18, okay.
We should make a bet, Like
no, I start. Okay, 18 months. Okay, in 18 months we have the halving has already happened. Interest rates are probably starting to go down again. What's the market cap of AVAX at the moment? I mean, market
800.
Whoever shouts it out wins a
twice,
prize.
minimum twice in 18 months of where we are now.
60%.
Laura?
You mentioned a good one, the halving. Historically, it's added another 0 to the price, but yeah, we'll see. I think hopefully we hit all-time highs and maybe we stay there a little bit within the next 18 months. We'll see.
All right,
Definitely not 1 million.
You heard it here. Fabio, Jeremy, Laura, thank you so much for taking the time to talk today, and thanks to everyone for listening in.
Thank you.
Thank you.
Thank you.